I think now could be a decent time to buy a house because you can still go ahead, you can make an offer, and I think sellers are more willing to negotiate right now because inventory is rising. Hi, my name is George Griffin, eXp Realty, broker associate, and Mac 5 mortgage loan broker in the Denver, Colorado area. Let's talk about mortgage loans. It's not the most glamorous subject, but it's a valuable resource if you are buying a home, right? The lender provides a big chunk of money up front, and the consumer agrees to make the payments to the lender over time. An example is buying a new car. The car loan company pays the car dealer for the car, and you make the payments each month to the car loan company. And what's important is whether it's a car loan or a home mortgage, you make your payments on the due date or before that. Most people think mortgage interest rates are set by the Federal Reserve, the central bank, but that's not true. The Federal Reserve controls the short-term rate for credit cards, but it's the 10-year Treasury bond that affects fixed mortgage rates. As 10-year Treasury bond yields rise or drop, mortgage interest rates follow. Mortgage rates vary based on how the economy is doing. When the economy is healthy, meaning unemployment is low and consumer spending is high, mortgage rates rise to cool the economy because inflation is rising. And that's exactly what's happening today. When the economy isn't doing as well, when unemployment is high and people aren't spending, mortgage rates drop to help boost the economy. Well, back in April of 2020, the beginning of the pandemic, the economy wasn't doing well and interest rates dropped to help the economy. Mortgage rates and inflation go hand in hand. So when inflation rises, interest rates increase to help slow inflation. And so when inflation starts to spiral downward, then rates drop. I'm a licensed mortgage loan originator. I can take a loan application and run a credit report and provide loan options that fit your needs. Some of the most common loan products that are available are conventional loans, FHA loans, VA loans, USDA loans, and reverse mortgages. What's important is the upfront costs. Most people don't know that. And what's associated with that? Well, you have loan origination fees, you have credit report fees, you have local government taxes, you have homeowners insurance. And basically, you should talk to your accountant or financial advisor before you go out and make an offer on a house to make sure you know what the risk and advantages are. So what I do is I take a loan application and I gather critical documentation such as pay stubs, W-2s, previous year tax returns, social security number, government ID, and I will pull a credit report and help analyze all that information, vital information, and help determine whether or not a person can afford that property or the price range they're interested in. And then if your credit looks good and you can afford a payment, I give you a pre-approval letter if you meet the loan criteria. Basically, when you buy a house, I take your real estate purchase contract and loan application, forward it to the lender, and then they will determine if you meet all the criteria. They will look at your income to loan, income to debt ratio, your employment, your credit report, your credit history, your assets and investments, and they will determine if you will get a loan. So you have a pre-approval letter that will provide you clarity on what you will need to budget for a home. I will tell you how much you can afford per month, and it will also provide the seller, reassurance that you are a credible buyer, okay? The week ending November 17th of 30-year fixed mortgages interest rates were at 6.61%. The week prior, they were about 7.3%. It was the biggest drop in average loan mortgage rates in 40 years, okay? And that had everything to do with stock market going up, and therefore mortgage rates went down. The increase in interest rates this year has shaved off buyers' purchasing power. Last year, consumers that could afford a $2,500 a month mortgage payment with 20% down payment would equate to a $759,000 purchase price. In today's market, that would equate to a $476,000 purchase price. And that is huge. That just goes to show you how mortgage interest rates can impact purchasing power. So no one has a crystal ball. No one knows when interest rates will drop again, but it will have to do with the Ukraine war, and it will have to do with inflation. Several companies benefit from when a real estate transaction occurs. Title companies, appraisal companies, mortgage companies, real estate companies, and realtors. We need to get this interest rate situation turned around. I think it'll happen next year. I think it'll happen towards the end of the year. However, I think now could be a decent time to buy a house because you can still go ahead and you can make an offer. And I think sellers are more willing to negotiate right now because inventory is rising and buyers are kind of sitting on the fence right now. They're not sure if they want to buy a house now or wait until interest rates go down. I think it could work out in your favor. Why? Because if you take out a loan now and you get a 7% rate, then in a year or two, when rates go down, you can go ahead and refinance your loan. Sure, there's going to be extra fees associated with refinance, such as title insurance and appraisal. However, you can recoup those refi fees within a year or two. When your payment goes down, your savings each month will help pay for that refi. So I would look at it. If you need help, you can come to me. You can get more information on my website, www.georgegriffinrealestate.com. If you would like to learn more about investing in real estate, please go to my YouTube channel, leave a comment, click like, subscribe.